You're good.
All right. As we have people dropping in, we're gonna continue on this. So we were talking about where we can drive the rents to. And you mentioned they're on vouchers and
Right.
the potential for market rate B to be at 1,300. Is that where HUD is saying you can
Yes.
rents to? Okay. And do you know if that's been confirmed by someone, or is that something you would have to request?
No, I do know it's confirmed. I actually worked alongside another multifamily company before, and I know vouchers in that C-class area, they can get about up to that 1395.
I love it. Let's be conservative.
1300.
Okay. Great, man. You would hope to be at 100% on this exit to be the same, but to be conservative, typically I either keep it the same. Typically on the right, actually around 90 to 95% occupancy.
Okay.
Because that's where they are a lot of the times.
Right.
Anyway, so I'm gonna do this at 95, and then we can kind of mess around with it.
Okay.
In there. So, and then we're gonna stick a exit cap rate of Atlanta cap rates, man. Do you have any idea as to where the market cap rate is right now in that area?
I believe it's at 6%.
It is at 6%. So putting in a 650 is what most people are recommending right now from a traditional underwriting standpoint, which is what we ascribe to as underwriters. I'm going to leave it at 650. If it's a 7-year term, maybe it should be higher, but we'll leave it at 650. Kind of see what goes from there. So then what it does is it calculates an upside based on your cap rate. Based on your purchase price and this sell price right here. So we're seeing that we're selling it for less than we bought it, but that's only because one, cap rate's higher. Two, NOI is about the same as you bought it. Because of the occupancy issue. So now if we were to put this at 100%, then we can have a more apples to apples comparison on here. So you can see that, there's still somewhat of a quote negative upside on here just because the exit cap rate is higher than what we're buying it at right now.
Okay.
And that is the caution that I always put out there when you buy things on seller finance. Because the cap rates can be affected by so many different things that you might end up selling it at a higher cap rate than you bought it for.
Okay.
More so than you're able to get a profit out of it based on your performance or driving your NOI.
Okay.
So also what's driving this is the expense ratio, right? So if we were to keep this 45, we're still kind of under in terms of your upside and selling later on down the road. So so then you can take this and you can play around with it and say, is this something that I want to pursue? Is there room here for us to negotiate?
Yeah.
Say, hey, look, man, let's look at 100,000 a unit. And he might be like, oh, you're crazy, which, would be a great deal because you're coming in at a 7.26 with a decent upside on a 10 unit. Right. And so you can play around with that in your negotiations. And what was the last one that I saw? The last deal I looked at over there, we were getting close to like 105. So you could do just 110. Oops. I'm seeing that's looking better, right?
Right.
And so there's an upside there. The cap rate going up doesn't super affect. Actually, it's going down. The cap rate's going down from the 6.6. It'd be great to buy it at a 6 cap. Right. I mean, worst case scenario would be great to buy it at a 6 cap. right off the bat, as opposed to that 5 cap. And then, of course, the other entire component of this is your debt. And, if you're unable to get this rate, then your next best bet is going to be a recourse debt from a bank, which is, getting close to that 8-9%, on a 20-year amortization, with a giant balloon. And so, that probably won't be feasible, and you'd have to have a much, much lower price for that to make sense. So if he's able to keep these terms and go down on the price, great.
Mm-hmm.
That would.
It's breaking up.
Yeah. Oh,
Hold
am I breaking up?
Yeah, you broke up for a minute.
Marcel says, send Papi Aldo to yell at the broker. I don't do that. That's Will. Will yells at the brokers. I'm just kidding. No, Ed yells at him. I talk to him sternly. So yeah, no, this to me is a little bit high, personally, on this deal. Even though you're getting some pretty decent rates on this, some pretty decent terms, man. It's just a little bit over where I would be comfortable investing, because I don't know where to materialize some gains for my investors on
Right.
this, right? And so I'd have to play around with that number. Now, this isn't a full dive into your underwriting, right? So we're not putting in specific expense assumptions. We're not running the tax, the entire tax calculation. We're not getting that insurance quote. We don't know where, is this managed or is it self-managed?
It's managed.
It is managed. So there's that cost on there. So we don't, necessarily know what that expense could look like, et cetera. So, but to me, when I look at these, and Mario, this is going back to your initial question, is it worth it for me to explore? Okay, well, so I looked at cap rate at purchase. How does it compare to my interest rate? Well, these are terms based on seller finance. So that's one other thing to consider, right? Then I'm considering where I'm going to drive my rents to and how that's going to impact my upside. And my upside, comparing it to the number of units that I have, 10 units, I'm not going to expect $1 million upside on this, right? That's if there is, call me, I'll buy this right now. Right. And so I'm going to look at that. I'm going to look at, what my potential year one could look like. So if I'm going from 1,100, let's say at year one, I can drive things up to 1,200 at, 100% with a 45 expense ratio. At this price at 1.1 million, we're looking at a potential 6.4% year one return, which is really good, right? If you can get it at this. So, you can then move this up a little bit, see what that looks like. Okay, that's more like it for, a deal nowadays. That's probably the best you can get anyway. I don't know how willing they are to go down on their pricing. But at 1.2, I would consider this and I would put it into a calculator. If he's saying absolutely not, 6.4, 1.4, this is it, no way, then I'll be like, okay, well, then I'm out. So does that help, by the way, Mario, the areas that I kind of took a look at here?
It does. I just have one more question. I don't see it, but excuse me if I'm just missing it. Does this have a hold period attached to it?
No hold periods here. Yeah, no hold periods here, because what the hold period is going to do, it's just going to inform your internal rate of returns or annual average returns.
Okay.
Right.
Okay.
And it's going to also inform, that and your interest only periods are going to also inform that. So this is just very basic, is it worth to explore further or not? Right. At 1.2, to me, it is. At 1.4, it's definitely not for me.
I don't have this version, although I've got a much more simplistic version of the napkin. So I know someone else had requested the link. I think we lost it.
So I'm gonna get the link right now and I'll put it in the chat.
Okay, perfect. Yeah, because I didn't have any of the return section or year one. So I think I was just stopped at the debt and I had the current and market rent. So some of the questions I asked you earlier, had I had the newer version, I wouldn't have had to ask you. So
Yes,
I
but feel
appreciate your
free to take
patience.
this, make copies of this and use this as
Okay.
your, okay. Awesome. Unfortunately, folks, this was fun, but we're at the hour mark. I'm gonna butcher it again. Chubezi.
Yeah, Chibeze.
Chubeze, my bad. Chubeze, thank you
Yeah,
for bringing this deal, man. This was a great deal. And good luck, man. If you need any
no
help
problem.
down there, let me know. I might know some people down there. But other than that, thank you and good luck with that deal.
Thank you.
Yeah, no, absolutely. Thanks to all of you for showing up. Thanks to the boss, Marcel, for coming up as well today. And really hope you guys have a great rest of your week and hope that you're finding value, and we'll see you next week. Have a great night.